My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but it's also to educate, teach, and put it in context. So call me at 1-800-743-CNBC or tweet me, at Jim Cramer. Can I get one of these? Today, the Labor Department released some not-so-hot employment numbers, and while that's not exactly what we wanted, it's exactly what we need. That's why stocks were able to actually rally on that news. Dow gaining 69 points, was higher most of the day. S&P climbing 0.09%, while the NASDAQ, which is tech-heavy and does well when the economy's really slow, dipped 0.17%. Why the heck are we rooting for really weak data? See, it's all about the macro. Now, I've never been a fan of macroeconomics. It's too big picture for me. But when our interest rates are much higher than the rest of the world, and the Federal Reserve is reluctant to aggressively cut them, well, the macro matters, and it matters a lot. That's why this disappointing non-farm payroll report was so important. It gives Fed Chief Jay Powell a lot more leeway to cut interest rates if he wants to. Remember, Powell's a traditionalist Fed chief, far more traditional than his predecessor, Janet Yellen. And traditionally, the Fed is a lot more concerned about preventing inflation than about keeping the economy roaring. That's why Powell wants to be so measured with these rate cuts, even though he was anything but measured with his rate hikes, asymmetrical and wrong. The problem is this old school mentality is really starting to hurt the economy. Look, I get where Powell's coming from. I lived through the 70s. I understand the fear that inflation is always lurking around the corner, and if you don't stamp it out, it will wreck your economy. But this isn't the 1970s, Jay. Jay, you're an old economy guy. Come on. Powell doesn't realize that the new economy is inherently deflationary. Sure, we're creating tons of new jobs, but thanks to the impact of labor-saving technology, wages are barely going up. For an old economy guy, I'm sure that's puzzling. But if you watch the tech companies I have on this show constantly, you know they're all about letting companies do more with fewer workers. In short, the Fed doesn't need to worry about inflation. I think they should cut rates and cut rates aggressively to offset any potential damage from the trade war. Trade war, you know I favor. A not-so-hot jobs number makes it more likely that Powell will do the right thing. So the bulls got their number. The president was still able to crawl about 3.7% unemployment, one of the lowest figures in 50 years. And it's unlikely we'll have to fight the Fed. That is great news, people. As the late, great stock sage Marty Zweig always used to tell us when he'd appear regularly on Louis Rukash's Wall Street Week, don't fight the Fed, don't fight the tape. The macro means we're not fighting the Fed. How about the tape? Okay, to figure that out, we got to go to our game plan for next week. On Monday, the focus is going to be on some big Chinese data. Their consumer price index and producer price index. Is it too hard to put them out from one day in our country? They put them both ways. We do one day and then the next day. It's silly. I think you have to be wary of any official numbers coming out of the People's Republic. But we need to know how their economy's doing. And these two figures could give us some clues. Every day it feels like we're reassessing who has the upper hand in the trade talks. If China's experiencing serious deflation, maybe they're in a worse bargaining position than some of us think. If there's major inflation because they've debased their currency, that could also make it more likely for them to make a deal. If they're not too hot, not too cold, well, that might mean they'll be less willing to make concessions. This thing's going to drag on. So let's keep an eye on the numbers. Tuesday, we hear from RH. That's the old Restoration Harbor run by the great Gary Friedman, and he's been on a roll. Later tonight, I want to talk about how Lululemon's creating destination retail. Just engineering growth. But you know what? Nobody does it like RH. While it will be hard for Friedman to top his last set of numbers, I think he'll do it because it's so much fun to shop there. And by the way, the prices, RH has a terrific membership club that saves you a ton of money like Costco. You seen that stock? Anyway, have you been to a Restoration Hardware lately? It's an Instagram extravaganza. You are Gary's best advertisement. I was Rooney McFadden last time I was there. We also get results from Zscaler. Oh, man, has this stock become controversial? And Zscaler had been one of the stocks that we focus on when we go out to California frequently. You know what? This is a cloud-based cybersecurity play. And a funny thing happened on the way to the cybersecurity forum. For once, there's some stiff competition in this business, and it is getting vicious. Earlier this week, Nikesh Arora, the CEO of Palo Alto Networks, PNW, delivered a picture-perfect quarter. Stock keeps going higher. And told a story about offering protection for both on-premises systems, using firewall, and the cloud. And protecting the cloud, well, that's Zscaler's bread and butter. That's why the stock's been clobbered for the past couple of days. Anyone listening to Kesh knows the space is getting real crowded, okay? As he actually took a shot at Zscaler when he was on with me and David on Squawk on the Street. Hey, you know what? The gloves are finally off in this sector. Why does that matter? Because CrowdStrike. Oh, did you see the stock CrowdStrike? Another cloud security company that's been blessed by Amazon reported a terrific quarter and then saw its stock obliterated, down 12%. So Zscaler, be careful. Wednesday night we get Wednesday morning we get mortgage applications. Now get this: with interest rates so low, you'd think all things housing would be spectacular, right? But unfortunately, there just aren't enough homes for sale. Remember how it was 10 years ago where there were too many homes? Now we don't have enough. That's why I don't expect a good mortgage applications number. I'm also betting we get a weak producer price index figure, and that's good. It gives more ammo to the doves on the Federal Reserve who want to lower rates ASAP, like they should. Hey, after the close, I'm going to talk about a value stock for a second. All right, maybe a little bit of a joke, but Aurora Cannabis reports. Last year, this group was blazing hot. Now it is freezing cold. I'm starting to think that the pot stocks have become too hated. I've been scrutinizing Tilray, looking at Afria, I say, Irwin Simon, Kronos, said $11 with all that money from the tobacco companies, Canopy, as names that may just have become, are you ready, ski daddy, value stocks. Don't laugh. In a world where there's so little growth in the packaged goods industry, these weed companies have a lot going for them. Edibles, drinks, patches, solves, be careful vaping, you name it. Not to mention actual medicinal marijuana that I think one day is going to be approved. Now, not GW Pharma, I'm talking about broad. Thursday may well bring us a tame consumer price index number, again, giving the Fed more reason to cut rates. Oh, and if you want to know how the CPI could be low, just listen in on Kroger's conference call. The supermarket chain simply cannot raise prices to save its life. Why? Well, because the world's dominated by, yes, Costco, and Amazon, and Target, and Walmart. These huge players are doing everything they can to keep grocery prices down. They're succeeding because that's how they edge out the competition. No wonder Kroger stock has been wallowing for ages. After the close, we hear from one controversial stock that is just one of my faves, frankly, and it's Broadcom. That's the old, AVGO. This might be the most important earnings call of the week. Why? First, Broadcom does a huge amount of business in China. Second, it's supposed to be the putative buyer of the enterprise portion of the cybersecurity company Symantec, although there were new reports say that two private equity firms have approached Symantec to buy the whole thing. Let's see what develops there. And third, the company's got a great handle on 5G, and thanks to the acquisition of CA, the mainframe business too. Broadcom CEO Hock Tan is both wily and tough, and boy, does he like to buy his stock back. I bet you he delivers a terrific quarter. Finally, we have the biggest macro number of the week, and that's retail sales on Friday. The great conundrum of this economy is the incredible decline of the mall, which is captured in the overall retail numbers, combined with a spectacular growth from the e-commerce facilitators like Amazon Web Services, Etsy, and Shopify. This morning, when we interviewed my old pal Larry Kudlow, the president's chief economic advisor, he talked about how the new economy is creating all sorts of uncountable jobs. They're just too under the radar to assess, and they're often deflationary. So you get weak retail sales from everyone except the uncountables. That's what I call them. Think people who are selling stuff on Etsy as their side hustle, and the big five, Walmart, Amazon, Target, Costco, and Home Depot, which, of course, is my favorite watch list. Look, like I said before, I don't like placing too much emphasis on these macro numbers. It's a bad way to make investment decisions. But the president and the Fed chief are at war over monetary policy here, so the macro matters. Love him or hate him, Trump is absolutely right on this issue. And the bond market is practically begging Powell to slash and burn rates back down to 1% here. The president said today in a tweet that he agrees with me and my view about Powell. And I'm glad he does, because rates must come down to reaccelerate this economy. Democrat or Republican, you should agree with that. The bottom line, even if the Fed chief won't listen to the president, he should certainly listen to the bond market, which has made it crystal clear that he raised rates too fast, and now they got to come down almost immediately. Justin in Kentucky. Justin.
Thanks for taking my call, Jim. I wanted your input on Ericsson, stock symbol ERIC, and the role it'll play in the global rollout of 5G over the next few years.
It should be good. It should be good. But Huawei has consistently underpriced its business and made it so even though Ericsson has been my preferred way to play it, I've switched to Marvell, MRVL, as a way to play 5G, because then I don't have to worry about the Chinese trying to wreck a European company that is defenseless, because the Europeans don't protect themselves against the Chinese. Peter in Tennessee. Peter.
Professor Cramer,
Yes.
Thank you for showing me and my son Jackson how to put our earnings to work. I've earned some money, and I really appreciate it. Listen, last week while you were out, Ulta took a dive, and in sympathy, I think my Estee Lauder also went down. Is this a sign for me to pull out? Or should I double down or just hold on?
Okay, Estee Lauder didn't really come down that much, sir, and it hit an all-time high today. Fabrizio Freda, I think, acquitted himself incredibly well. Mary Dillon, I think, does have a little more explaining to do because Ulta shouldn't have been as bad as it was, particularly because Macy's actually had a pretty good section of that market. She blamed, let's say, some companies not having enough fresh stuff. Estee Lauder does have fresh stuff. Don't sell your Estee Lauder because of Ulta. And by the way, Estee Lauder's diversified very much away from the United States. Dan in Florida. How about Action Jackson liking the show? Dan in Florida. Dan.
Jim, love your show.
Thank you.
Really like your Action Alert emails, too.
There you go. We got a big club call next week. Go ahead.
You've been positive on Canopy Growth Corporation in the past because of their cash position and relationship with Constellation Group. I got in the stock for the long haul, and I know it's been up the last couple of days big, but after their firing of their CEO a while back, I wanted to know, is this a broken stock or is it a broken company?
I search, Dan, myself, because I was shocked at how bad that last quarter was. The company is leaderless right now. Constellation doesn't seem to have a handle on what to do. It's now wait and see. Now you can say, Jim, you liked it at 40. Well, you know what? I liked it at 40 because I thought they were doing well. And then they report a horrendous quarter. Am I supposed to double down and like them even more? Hey, I got it wrong because they got it wrong. All right? What can I say? I like Kronos more. Pal, listen to me. Jay, listen to me. Take a cue from the bond market. Forget the president. Take a cue from the bond market. Rates are too high. Bond market's big. You know and trust it. On Mad Money tonight, what's ahead for Amazon? The hot tech stock has made you a fortune over the long term, but can its reign continue? I'm going to tackle the technicals. I think they're going to tell you more than you ever want to believe. And then I'm stirring the pot when it comes to investment in Campbell's. Is the stock good? I'm going to give you my take. And shares of At Home took a tumble yesterday, but with the shares moving higher today, is the company remodeling? Hey, I got the exclusive with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.